Troy,
Great.
kick it off.
Yeah. So Tech Wildcatters brought this together today. Tech Wildcatters is a global accelerator program and venture capital fund strategically headquartered in Dallas, Texas. For the last 10 years, we have invested in over 100 companies, early stage tech companies. With a global deal flow, we select top tier founders for our milestone-based program. This program helps the founders use outside capital only to scale while aligning them with industry experts needed and a clear funding path. So today specifically, I want to talk about the food industry revamp, restaurants post-COVID-19. So due to the pandemic, restaurants are a part of the industry tier that's been negatively impacted the most. Considering that most of the dining out experience is being able to eat at the establishment, we want to know how restaurants will prepare for uncertainty, including pandemics in the future. We're sitting down with Devin Baptiste, founder and CEO, and Paul Kwiatkowski, co-founder and CTO of GroupRaise, to discuss what we think the future holds for the restaurant industry. To mediate this conversation, we have Ricky Tejapaibel. With 20 years of investment experience, Ricky is an entrepreneur, startup mentor, and has worked in management consulting, investment banking, and corporate finance for companies in the Fortune 500, including General Motors, as it emerged from bankruptcy. He now is the managing partner and CEO of Tech Wildcatters. So I'll go ahead and let him take it from here.
Thank you, Troy. And Troy's on our investor relations side lead. So anybody who interested in investing in startups, feel free to reach out to Troy or reach out to myself as well, or just want to learn more about the ecosystem. And for entrepreneurs, we always want to be a resource. And today we have GroupRaise here joining us. So GroupRaise came out of our Tech Wildcatters Accelerator program back in 2013, have grown a lot since. So I'll let Devin and Paul first introduce themselves and then introduce the company and their journey of how GroupRaise came together.
Awesome. Paul, do you want to introduce yourself first, and then I'll follow you up and give a little GroupRaise context?
Sure. I can go first. I'm just a lifelong software craftsman, an entrepreneur, always kind of balancing that line between what's possible technically and then what can you get away with without building technology, because in the end of the day, the customers don't care if you do the job with technology or not. It's about serving their needs, providing value, getting a solution in their hands, and with restaurants especially, helping them get and serve and maintain customers and grow their operation. I really just enjoy that back and forth of helping to find a product real value prop and never losing sight of the what ifs or kind of the big picture optionality stuff. In a past life, I was a restaurant manager, and in addition to that, I really very passionate about some social causes like education and housing. And so, Devin will do the pitch for GroupRaise of what we do, but I think you'll see how it's kind of a sort of a natural fit for me to be doing this.
Awesome. Yeah, well, my name is Devin Baptiste, the CEO of GroupRaise. I always like to say GroupRaise is the most delicious way to change the world. But what we're doing under that is helping restaurants fill their slow and undercapitalized times on average with groups of 55 customers. So we started the business in Houston. And I think in 2013, when Tech Wildcatters invested, we probably had maybe 200 restaurants on the platform, something like that. Today, we're working with just over 10,000 restaurants across 500 cities in the US. And what we do mainly is we help them do large group reservations where a percentage of the sales gets donated back to a charitable cause. Before pre-pandemic, that was mainly in restaurant. And so we've had kind of a big transition to using digital channels now, which I'm sure we'll talk about a lot. In a previous life, I used to work for the city of Houston on a project called the Houston Hope to essentially figure out how to match financial products with local consumers who are looking to buy houses. I have mentor a lot of companies and just really passionate about the kind of intersection between consumer behavior and supporting local business.
It's a good intro. So I'd like to get your thoughts on, based on you working with over 10,000 restaurants, get to see the the problem that the restaurant industry was facing, let's say 10 years ago, and has developed throughout, and like any industry, technology drives the needs, drives the change. And this year with the pandemic, it accelerates the change. I always see it as whenever there's situations where people need to scramble and adapt to survive, that's when they realize that, hey, you can't just sit and relax behind while you have to adapt new technology and move towards it. So where's the restaurant industry in this technology curve, and what's the impact that COVID has done to the restaurant industry? And I think we're not towards the end of it yet. We've seen the first couple months was really scary, and now things starts to stabilize, but we're still waiting to see, all right, so how are we going to come out of this post-pandemic?
Yeah, I mean, I think we should talk about the 10-year arc, right? So if we look at 2010, restaurant industry was about 590 billion in sales, something like that. And in 2019, it was probably about 830 billion in sales. So typically the restaurant industry has been growing about 4% year over year across the decade. And, you know, this year, I think we're down there. It's projected to be down maybe 230 billion. You know, so kind of back to 10 years ago in terms of sales is kind of what broad story is. But I think the interesting thing in that is that the nature of where those sales are coming from and the margin of those sales and the consumer channels of those sales are all fundamentally changing. Historically, the restaurant industry has been a laggard in terms of adopting technology. It's been around like literally as long as people have been eating, right? So, and operators get very intense ingrained lessons, you know, over 20 to 30, you know, multi-generational kind of family operations. And so, you know, I think this kind of pandemic environment is doing exactly what you talked about, which is fundamentally changing the rate of change inside of the restaurant industry, especially in the technology stack that restaurants are using. I think last year we had about 30 billion in online, like takeout and delivery. And I don't know what the figure is going to be for this year, but I can imagine that it will probably, you know, more than 5x, right? Which is pretty substantial, pretty interesting to watch and understand. And so, you know, I think kind of when the pandemic first hit in March for us, many of like, I've got a lot of other friends who run restaurant tech companies, and just had 2,000 cancellations in a month, which for context, like 100 cancellations for GroupRaise in the past would be a really high number. So it was definitely a kind of sky is falling moment. But I think what we've seen now has been just, there was already kind of coming into 2020 a big focus on off-premise, on third-party delivery, and really getting first-party systems up. And it was kind of something you knew you needed to do, but a lot of restaurants hadn't done. And that adoption has gone. People are turning on any sales channel that they can to move into this, and are really open and willing to change their technology stack and think about it as a technology stack. And so, you know, there's just a lot we can kind of talk about in there. But Paul, did you want to add anything to that?
Yeah, I guess the thing I'll chime in on is, like, I think there's a divide to be made between talking about the restaurant industry in terms of like what is an individual restaurant doing and why do they make choices, and kind of like a structural high level analysis. One of the things to consider is just that restaurants are just a notoriously brutal industry. Like 50% of new restaurants that are small business that are not part of like a big established chain will fail in the first year, and like I think only 80% fail within 5 years. And if you hit the 5-year mark, you tend to persist quite a long time because you found the right market and location and operating structure and cost structure and everything. But it really is just this grind for the first 5 years. And a lot of change in technology doesn't happen because a better product comes out, right? I mean, having been a restaurant manager, you don't I was in the position of people coming in, walking in my door, not even wanting to sit down and buy food, but then just try and sell me on some stuff. And it's like, I don't have time for this. I'm like as a startup operator now myself, I have to kind of have some humility. It's like, as much as restaurants really deeply care about what the good we do in the community and helping them drive sales and everything, they also, to an extent, like, we're priority number 2 always, because priority number 1 is the customers that are there, the customers they're cooking food for, their staff, and making sure that everything's running smoothly day to day and that it's not on fire. And so they don't think about changing technology actively unless something up until now, across Devin talking about this 10-year arc and it being slow. That's because a lot of it was driven not by an active seeking of better solutions, but often by cohort replacement, right? Like, restaurants fail, and then when new restaurants come on, they get to look at the fresh kind of, okay, what are the solutions out there? If you've had an inventory system for 20 years and you've been that successful restaurant for 20 years, someone walks in the door and tries to sell you on a new inventory system, you don't got time for that. The one you had, it works. Everyone in your staff understands it. You just be wasting time retraining, even if it's a legitimately better technology solution, a legitimately better product with better service. It's just not on your mind. You got a thing that works and you move on. And so that's the thing I think I would say is that, like, unlike the normal operation of the restaurant industry over the last 10 years as it relates to technology and other service adoption, that COVID has shaken people out of that stasis into a seek mode for one of the first times in a very long time.
Out of the comfort zone and forcing them to change, to adapt, to survive. How are you seeing restaurants? All right, so the ones that are moving toward, whether it be automation, whether it be less contact with customers and all that, do you see restaurants that are forming up, setting up differently as they reopen in ways that are going to be really different? And what are the things that restaurants are doing right over the last 6 months since they started to reopen, or maybe fewer than 6 months? And what are the things that they should have been doing differently? Because some of them, there's still time to adapt, while some of them have learned a lesson and are struggling, and let's hope that they make it.
Yeah, so I think just even before the pandemic, we saw cloud kitchens actually come onto the scene. And this is really driven by the fact that if you think about a restaurant location, really a physical retail location is a channel, right? Like kind of any other channels. And what is fundamentally kind of the undercurrent of change is that consumers are willing to go to new channels, whether that's Uber Eats, Postmates, DoorDash, or whether that's going to a restaurant website and ordering through first party. As consumer demand switches channel, which it has done massively, I think that there was kind of this undercurrent of cloud kitchens and this idea of, okay, I'm going to cook food for multiple brands, right, at a centralized location that's really just optimized for delivery. And I think that makes so much more sense now, and to make more sense, there's a company called Nextbite, which is essentially a virtual kitchen marketplace that allows kind of traditional restaurants to sign up to sell other restaurant brands food with their kitchen. So it allows them to essentially take existing locations and turn them into cloud kitchens. I think this is a very interesting long-term kind of trend, especially in the sense of, like, you know, when we think about a restaurant's margin structure, I always think about it as a third is fixed cost, right? A third is going to be your food costs, you know, a third is going to be your staff, and you kind of have to squeeze those to get your profit. Anytime your kitchen is underutilized, which lots are going under, there's always costs associated with it. And so I think that there'll be a way less retail locations coming out in restaurants over the next bit of time, and way more utilization of the existing assets, either through kind of creation of new cloud kitchens that are not, you know, retail focused, but they're in office parks, they're in locations that are just based on logistics, or kind of taking existing kitchens and expanding the number of brands that cook out of your kitchen. And I think it's a very, very interesting and exciting time for that. And it's essentially, you know, if you have one of those brands, like Wiz Khalifa just launched a brand called Hotbox with Nextbite. And so it's essentially an assetless restaurant. So he has a menu, he has food items. He essentially gives the ingredients and the cook structure to a range of restaurants in the target cities he wants to go into, never has to put out a single dollar, and just uses his brand to drive sales to use kitchen utilization. And so I think that those models are not going anywhere, and I think they're going to grow extremely quickly, and they already are growing really quickly, and will continue to do that sustainably for a long time.
Those are looking from the restaurants aspect. And what about looking from startups that cater to the restaurants? Let's say, for example, GroupRaise, or startups that provide technology, automation, or anything that helps the restaurants become more effective. How would these startups approach that?
Yeah, so I got to say, best time ever, actually. You know, when we first went into COVID, everything kind of froze. Like, no one knew what they were going to do. And some restaurants, we had, especially our enterprise customers. So GroupRaise has about 5,000 independent restaurants and about 5,000 locations housed in 100 brands, enterprise brands. So we get a pretty good look across the industry at different kind of behaviors and structures. And, you know, literally just before I got on this call, we just closed another enterprise brand now who wants to kind of rethink the way they expose their customers to their digital offers, to their off-prem, rethink the way that they're doing operations. Kind of like what Paul was mentioning is now, before restaurant technology change happened in kind of cohort. So how many new restaurant locations are there? That kind of represents your early adopters. So places where a startup founder you can find, right? If you're smart, you'd be going and pulling every single new restaurant that opens every month and targeting them with leads, and you'd be pretty successful with that. Now there's just a much bigger swath of the market that's willing to try and buy new technology because they understand that the kind of old operating model is broken. And I would say overall, the amount of ops challenge has only increased. The amount of the business that has moved from a physical kind of people management game, which is still in play, to more of a digital brand management and kind of online ops, kind of technology management has grown a lot. So I would say, you know, if I was Tech Wildcatters, I would be really excited to fund the next wave of restaurant technology. If I was an investor, I would be really excited to fund that, because I think those companies are going to essentially have much lower CACs than they had in the past. You're going to be able to acquire customers much faster, much cheaper. And I think so far for us, the LTVs have been the same. It's a more consolidated industry, but you know, if we look at brands like Chipotle, they had lots of cash on their balance sheet. There were folks who were well positioned, who had lots of cash on their balance sheet, and now they just want to eat up as much market share as possible. And so I think those aggressors in the industry, which there are kind of trying new things like you can't imagine and are willing to spend and go after it.
Yeah, so that was great on the B2B play that you can go after the larger ones who are well funded, but even the smaller ones as well, that before that they didn't have the time or didn't want to spare any the resources to invest in tech. Now they see this urgency and also compare with what they're going to be spending in technology and software is still a drop in the bucket, even for the smaller locations, compared to the value that is going to be added to them.
Yeah, exactly. And I think a lot of manual processes, there's a lot of processes that restaurants put up with in terms of just putting another body at it. A lot of those workers left. And so there's all this kind of question of like, who's going to get rehired? And I think some of those workers, unfortunately or fortunately, or it's just disruptively, won't get rehired. And people will be looking for, okay, maybe I won't have a chief marketing officer, but I'll just need to have a marketing tech stack. Maybe I won't have someone who manages my social media. Maybe I won't have, you know, the same kind of operational spread, and I won't rehire those roles, and I'll go look for a technology offer instead. You know, I think that it's not, I do think it's overall additive, and it doesn't have to be competitive, but there's definitely a lot of decision makers who are thinking about how to replace their cost structure with technology over just hiring more bodies.
Do you think it'll be a while until we see brand new restaurants open up? Because if the demand, like the customers are still there, they still need to order out, eat out, but some of the restaurants unfortunately didn't survive, then you'll see a void, and then it's the demand supply that then opens a room for newer players to come in. And from day one, you can help them set up with the proper technology.
Yeah, I mean, I think it's interesting because if you look at the restaurant industry, like over the last 500 years or something crazy like that, it has been, you know, I think during the Great Depression, restaurant sales didn't go down. Like even like really, like even during World War II, like a pandemic was a very interesting thing, and specifically a time when being socially close is not permissible. And so even though, you know, so I think that I think consumers were still eating, people are like, and that demand still exists. It just translated, it just moved. I think it moved to grocery, it moved to other places. But when I think about in terms of new restaurants growing and growth, I think that's where, you know, I would consider launching a cloud kitchen, leveraging existing brands where you're not trying to imagine that consumers will discover your brand through kind of foot traffic, eye discovery, which, you know, historically it's all been about location, new brand exposure. So I think if you already have an existing brand, I would find ways to scale that brand either through existing infrastructure or build infrastructure to go that. I don't see a tsunami of new restaurant concepts being launched, but I do see folks figuring out how to meet this digital demand, like third-party demand, in pretty innovative and new ways.
Yeah, so it's more of the existing ones, that opportunity to grow for the ones that already have the business model figured out or the brand recognition and able to extend based on their.
And I would amend that slightly to say, I think that there will be actually an explosion of assetless brands, right? Mm-hmm. So like the Celebrity Cloud Kitchen, that's a brand that just exclusively lives on Postmates, DoorDash. You know, there's no CapEx, or maybe they just have one flagship location that's more novelty, and then they just use existing kitchen infrastructure to drive sales. And I think that that's really interesting. And, you know, if I was an industrious restaurateur, I wouldn't be looking for real estate to go launch location. I'd be coming up with a concept and convincing as many kitchens as possible to make my food, right?
Yeah. So you want to control the recipe, control the menu and the brand, and direct to the customers.
Yeah, I think that there's that is probably the more, I guess, exciting thing, kind of area to focus at. If you want to look at the industry as a whole, I think there is a divide to be made between those independent, smaller restaurants and larger chains. I think they're just what they're capable of, what resources they have, what they perceive themselves as capable of, which is often less than what they are capable of. Some of them, I mean, I'm an optimistic person by nature, but I will say that having lived about half my life in Texas and then now living where I'm at in the Northeast, just realizing that there's a gap in behavior based on weather. So like outdoor dining is going away. It's a lot of restaurants that were looking at a tough time were able to survive. You know, where I'm in Western New York, you're able to survive just because everyone wants to be outside all the time in summer because they're going to be indoors after that. You're looking at restaurants now going back into the winter, and I think there will be probably a second wave of some difficulties and closures. But then there are some restaurants, like there's been enough time now where people have adapted a couple strategies. So if you have a large premises, if you have a large location, that real estate is an asset of its own. And you've seen some restaurants, say, look, we're not profitable if we can only have 50% of our floor space indoors open. So they're investing in things like tents and heaters at a level where they normally wouldn't. Like, oh, it's just too cold no matter what. Our outdoors is just never going to be a thing. They're like, no, now like if we're going to survive, we're going to have that outdoors. So it's probably a great time to be a person selling heaters and tents. But in addition to that, things like
windows
right, just like that type of thing. Oh, but more to the point, more innovative things like breaking out half of your space and saying, okay, based on whatever the municipal zoning requirements or allowances are, I can have my space be kind of like a stop and shop retail-esque solution as well. Part of that requires some sort of adjustment in your operations, right? Like you have staff that's trained to cook food and seat people and give them food, and maybe you got into the delivery game for the first time, but now you're also kind of like a half retail concept, just because you want that mini mart to kind of boost your bottom line. People can just walk through, pick up some things for later. What you choose to sell and how. I mean, there's a lot of little tiny solutions on the edges that are going to keep those existing restaurants in the more mom and pop or independent space alive. I don't have a strong prediction about what that means coming out the other side of lockdowns and coronavirus, et cetera. I don't. But I think it's going to be one of the more interesting things to see is like the ones that adapted, do they just revert to being what they were before? Is there a permanent shift? Is it a proportion of the two? That's something I'm keeping my eye on.
Yes, I think there's going to be some sort of permanent shift one way or the other, but fundamentally behavioral, maybe in a year or two or whenever it gets, because if I'm talking to somebody in the travel hospitality sector, they're saying that, it's going to be at least 1 or 2 or 3 years, but restaurants, because it's local, it may not take as long to come back, but then certain behavior that now people are more cautious and all that, so that is expected to stay. What about on the investor front? So when investors look at investing either in the restaurant business or in more closely to what we're doing is investing in technology companies that help power restaurants, what's their take on it now post-pandemic versus before?
I mean, from my perspective, I would be pretty bullish. I think if there's anything that is fundamentally required, just before, a lot of technology was nice to have, and I think it's moved into the category of like a very strong shark bite pain. And so, I would be looking for concepts that have, companies that have probably 100 to 200 restaurant customers, who understand, that there is a core use case that are being used there. And I think that the adaptation of those concepts over the next 3 years, like from now, kind of throughout this time period, very, very strong. I'm on the perspective that there's going to be a lot of consolidation inside of the restaurant industry. And I think that in terms of like, when we look at SaaS multiples, or at, kind of selling technology to restaurants, I think the consolidated restaurant industry, with probably less locations, but stronger individual performers, that are going to be run on technology, that technology stack is going to last probably a commiserately long time, right? So I think what will happen is there will be a fundamental change, and then I think there won't be, because the restaurant industry is kind of like that. So I think whatever gets in the technology stack over the next 3 to 5 years will likely stay as a cornerstone of what that is, the way they operate, and we'll go back to a more cohort-based model of restaurant change. So I think this is a really unparalleled opportunity to put a lot to fund that changing restaurant technology stack in a way that those businesses can endure for, very long periods of time. So that's my perspective.
Yes, and it's like this window, this couple years window, where it's going to influence once the industry stabilizes, and it'll be.
Yeah, and yeah, I agree with that. And one I just had that I think it's worth looking at the existing players in the space. And so you look at, I'll give you an anecdote about a friend of mine who, family Thai restaurant. I think he worked in finance, and then he came back to help manage his families of 2 locations, and he's expanded it to 5. And I think I was having lunch with him maybe almost a year and a half ago. So it was almost a year before the pandemic and the lockdowns and et cetera. But he was talking about how he, having worked in a more technologically integrated industry, he had expectations for like what an integrated software stack could do for him. And he wasn't seeing that in restaurants, and it was frustrating to him. And he had a lot of interesting kind of perspectives on how like he had kind of like duct tape and bubble gum together. Like he was saying, he had evaluated a bunch of different POS solutions, and like this one didn't integrate with his preferred accounting software, and like this one did, but then like it wouldn't actually do recipe and inventory management. And so he was left with this like, okay, he had like 6 criteria he was looking at, but any given solution only offered him 4 of the 6. And he was savvy enough to kind of duct tape and bubblegum together the one he went with these other solutions. But it was like he tied Google Sheets into Zapier into like his QuickBooks, and like, he's like, I don't know how a mom and pop, anyone else, and my parents, he's like, my parents could never have done this. I did it, but like, I don't know how most people could do it. And over that next year, even, you know, pre-lockdown, et cetera, we started to see some of those providers start to inch over into other offerings, providing them that more fully featured, I guess, comprehensive solution, I would say. And that's still not there. Like, we're not at the end of that journey yet. And I think that there's an opportunity for, you know, new startups to rise up and compete and offer that, but also just startups that come in at the right time and offer a compelling solution to, you know, a lot of M&A is probably going to go on between existing, anywhere from Series A with traction all the way up to, you know, pre-IPO companies, just because they're going to try and consolidate, not restaurants are consolidating, but even the service providers around that, to try to be the owner of the space as we are in this, you know, 1 to 2 year shift where a lot of people are looking for those solutions.
It's about connecting to those restaurants that have the solutions in front of them that they're able to get.
Yeah. Like if you already use like a toast or like a Clover or something, what are they missing that they don't do, and what would they need to expand to offer that, or who would they acquire or merge with, or like what have you, right? Like there's lots of different routes to that. I don't think it's a singular story. I think there's going to be a new player that rises up. You're going to see M&A with existing players. You're going to see existing players just build their own expansions to what they offer because they're close enough to it already, or we're probably already had it on their roadmap before COVID, and now we're just like, oh, right. Now is the time for that, finally. You know, some product managers really happy that they're like, you know, the thing they've been fighting for this whole time is like suddenly top of the list.
Yeah. A portfolio company from 2016 called Scribble that they do these inventory management systems for restaurants. I got to check in with them to see if they're also getting this message that, hey, an opportunity for their potential clients.
Well, and the other benefit is that it's been traditionally really hard to get restaurants to sell to them digitally because they're in their location so much. And key decision makers, fortunately now, are not in the restaurant as much, which just means that like the surface area for sales opportunity has gone up dramatically. So it would take weeks to get a decision maker actually to just pitch a technology product of a very busy person, and now you're also just seeing those folks going to days, right? And much faster. But it's a very interesting time from that perspective.
Yeah. For those of you in the audience, feel free to type in a chat if any questions for our panelists as well as we start to head towards the last 10 minutes of the webinar. But the next question I have is that, do you also see for Series A level companies, is it advantageous that they can adapt fast to take advantage of these are what the restaurants need now versus larger technology service providers that they may not be able to move as fast?
I think the answer has to be yes, right? I don't think the old restaurant industry is coming back, right? I don't know if you were talking about this specifically just for restaurant tech companies, but I think that consumers have moved on. I think restaurants have moved on. There's a lot of fundamental assumptions that have changed. There's a lot of opportunity, but most positioning, not all. You have to look at each of the companies. There is some level of kind of moving to the left or moving to the right to reposition to take advantage of the opportunity. You know, I like, as we went into the pandemic, we saw a lot of restaurants closing. We work with 10,000 restaurants. I mean, we have a pretty good sample size of the industry. But then we also saw this tsunami of restaurants actually joining the platform who were looking to turn on new channels and have new expectations. And I think, you know, kind of restaurant technology expectation is going up. So if I was, you know, if you're at a Series A company, I think, you know, whether it's like, if we're looking at the big players like Toast even is struggling now because transactions just aren't happening in stores, like POS companies, which is what this huge tsunami of money went into. Like, you know, not as many transactions are happening in person, and so you really want to own the channel digitally. And I think you've got to make those fundamental changes to adapt to an industry that I don't think will ever be the same.
Yeah, I kind of want to chime in on that. Actually, my video just froze. Can you guys hear me well?
Yep.
Sanity check here.
Yep, can hear you,
Cool.
Paul.
We can hear you.
I want to kind of chime in on that, but also tie in a question that I saw in the chat, which was, and I want to kind of frame it in like an overall picture about data. Someone had asked, like, you know, why when restaurants shut down for dine-in, didn't they just like go email like every customer they've ever had? And the short answer is that the data story in the restaurant industry is a freaking mess. Like it is, like even just the most fundamental thing about restaurants, like menu management, is there is not a comprehensive solution. We're closer than we were 5 years ago. We're closer than we were 10 years ago. But you know, you're starting to now see service offerings that offer that like meta menu management. Okay, you have to be on like 8 delivery services, and you have to be on, you know, your POS as well. You know, there's now tools that will help you manage your menu meta across all of those. Those are starting to become available. But like that's one angle of the data, one example. Another example is like, why didn't they just email? I mean, most restaurants don't have the email addresses of the majority of customers that they talk to, that they have served in the past. A lot of them have wanted to. A lot of them have had like maybe one person in their org that said, hey, it would be great if, or like, hey, I've got a chart that moves, you know, up and to the right that shows if we did this, it'd be good. But there was just, you know, again, a lot of other competing priorities in their business that didn't make that the thing. I think there's been a lot of distractions in the digital space towards like shiny things. You know, there was the era of Groupon where like, obviously it had a win for certain types of experiential businesses, but for restaurants, it was clearly not a win, I think. But consumer demand just went there so much en masse that restaurants felt compelled to try it. And the question is did you get access to those customers you got through Groupon, or did like they gate them off? And I don't mean to, you know, just crap on Groupon here. I mean, like every platform that offers you a connection to your customer, how much are they arbitrating between you and your customer versus what do you really get out of that, and how much can you re-engage? So I think that's a thing that restaurants are finally becoming much more sensitive to, or some that are just now more, I guess, certain in their convictions, and ones that weren't now are kind of like, oh, how do I re-engage with people? Like, you know, I know there are restaurateurs that just like turned on their email list, you know, where they used to send out a coupon once every quarter or something, or some deal or some little holiday based thing. But now we're like, oh, this is one of the few tools I have. Like Devin was talking about channel expansion. Like this is one of the few tools I have. Like, oh yeah, I had a Facebook page I set up a long time ago, but like I've never really talked to my 5,000 Facebook followers, or, you know, 15,000 Instagram followers, or what have you. And just trying to figure out like what that means to them as a cohesive part of their strategy versus like just a fun thing they did because they heard about the technology and it was new, and you know, they figured why not, right? I think that like that mindset change about the data is becoming fundamental within the restaurants themselves. But to tie it back kind of sort of finally both to the sort of Series A startup adaptation agility question is, you know, it's trite because it's true that smaller companies can be more agile. But I think in restaurants, to an extent, it's only half true. I think that the advantage comes from certain sources. And one of them is that the younger the company, just the more strong their data foundation has been, more likely than not. And that's an advantage because, again, restaurants are starting to care about their data as well. Whereas previously, like selling restaurants on how much data you had,
Yeah, it didn't matter. But,
yeah, like
but it does now. Like, just to piggyback on that, I'd say in 2019 was the first time I heard a restaurant like sit down and say, hey, we're trying to calculate our lifetime value on our customers so that we can understand that and build re-engagement funnel. And I was like, oh man, this is 2019, first time I ever heard that come up, you know, but now I'm hearing that come up and they're thinking like, oh man, there's money in this data and there's value in this. And I think that like intersection of actually having the data structure and then being able to tell stories with that data to their customers, their, whether that's through their channels, right? So how do I get the data and then tell compelling stories through my channels based on that data? I think that that's probably the fundamental skill for the most successful restaurants over the next, bit of time.
Yeah, and I think one of the reasons it took us a while to get there is just that there was a lot of shiny distractions along the way. It was really easy to have like digital ad spend and then just show a chart in like clicks moving up and to the right, or just show that like more website visits happened, and then like, are the website visits or like the orders you're seeing coming from that, or is it just you just had a team at the local store that was doing a better job than before? Like you could correlate the data, but you couldn't prove a causal relationship a lot of times. So it led to a lot of like overspending on like, I'm not going to name any names, but I know of a large restaurant chain that invested a lot of money in an app, a loyalty app, that just was way overbuilt for what it was, because they had like envy of like Starbucks. Like Starbucks prints money off of their loyalty app, right? But that's because it was built on the back of a very strong existing platform. They in-housed a lot of the app development, design, and experience, and it was like just it extended out of their existing loyalty platform. Whereas if you're a existing chain and you just try and like in place shove your existing loyalty program aside and put this new app there and force people to use it, you probably spent a lot of money with not a lot of thought on that execution and follow through. I think a lot of those distractions have now come to pass, and the restaurants that tried that have learned those lessons and are now more sensitive to, as Devin said, like things like LTV, things like what is the transition like, and also just obviously the nature of COVID forcing them to interact more digitally. I'm not saying apps are universally good or bad, but I just think that the reasons that restaurants are going to them are now more correct, and they're actually chasing where their customers are for real reasons versus just like what they see as a trend.
It's like they see it as a more of a science than just based on intuition and
exactly.
Right,
Yeah.
So those are good insights. So we're about to wrap up in the next couple minutes. Any advice to entrepreneurs, other fellow entrepreneurs out there that been through the grind, and how they should be looking at this as the era of change, era of opportunity, and seize the moment to really make an impact?
I guess from my perspective, I would say that even though on the outside, when you first research the industry, things look very dire, that in fact now that has created a lot of opportunities. So I would actually tell you to be aggressive and go for it. I'd also say the same thing on the capital side. I'd say that there are folks who are writing checks. There are folks who are looking to take advantage of opportunity, especially smart investors. So I wouldn't, let the kind of if you Google restaurant industry and read a Forbes article, it'll look pretty dark. But go get your firsthand experience. Like anything, the more time you customers, the more time you understand their pain, understand where they're at, you'll get your own perspective. So I think it's a good time to be aggressive.
Yeah, I think I'll just second that. I think that's like 90% of what I want to say anyway. My ad is just to kind of really focus in more on that customer understanding and like having a sense of humility about like where you fit into the ecosystem, right? I think that the more B2B you are, the more you really just have to deeply, it's a different type of empathy than the usual user, customer, et cetera, empathy you need for a consumer-focused company. And just understanding you're going to get, when you get in front of a customer who's a business, like that is so rare to actually get their attention in a way that you need to speak to what they're doing in oh God, I want to say this, but I don't want to sound like a cliche, but I think I don't have almost any choice, that you're not the most important thing to them, but you have a chance to show them how awesome they can be with you. And as you're talking to customers, just like, especially if you're early stage, just if they start to go off, if you're doing a customer interview or you're finally selling somebody and they go off on a tangent, just let them go off on the tangent and learn, like take notes. that's the big thing, because you're going to learn 50 more things about what's going on in their world that are going to widen your perspective way more than like the $50 you might have gotten from them that month for a sale. Yeah. And like, especially the earlier you are, the more that wider perspective is relevant to you, I think. Yeah.
Yep. Yeah, I second that as well. It's understanding your customers. It's hearing what their motivations are, what their problem is, and then you can jump in and say, all right, so these are things that we can do to help them reach their goal. And then your goals, your incentives are aligned. So with that, I'd like to close out. Thank you, Paul. Thank you, Devin, for sharing your insights based on your experience firsthand, frontline in the restaurant industry with GroupRaise. And I could thank all the audience for joining us today. We got audience joining from different parts of the US and also internationally in other continents as well, different time zones. So thank you for joining us. We'll have a rerun of the video posted on our YouTube channel in a little bit, and check in with us again on next month in November for the next industry that we're going to be covering as we transition out of this pandemic year, and hopefully next year looks a lot brighter from a technology standpoint and from how things go back to close to normal and more livable conditions for all of us. With that, I'd like to stay safe, everyone, and we'll stay in touch.
Thanks for having us.
Thanks, Ricky.
Order at a local restaurant, spend some time talking to a restaurateur. Their perspective matters the very most. We appreciate the time.